Well, hello, good morning, and welcome everyone to the AgYield War Room. It is Friday, September 27th. I am AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan yet again today. Before we kick things off here, feel free to join the discussion any way you can. Post a comment or email us at info@agyield.com. One of the things you could post, even if it's not show related, you could ask, how does Daniel Jones make $160 million and play a divisional rival and not score a single touchdown? That could be a question you ask. I'm certainly asking it. Anyway, neither here nor there. Let's go over to Ryland with some of the overnight numbers.
Yeah, thanks, Jack. So D's corn 413 down a quarter overnight. No beans 1041.5, and D's wheat 579.5 down 4 3/4. So a little bit of mixed action overnight in the grains. Looks like the stock market is up a little bit right now. We got Dow Jones up 86, S&P's up 9, and Nasdaq up 40.
Thanks for that, Ryland. Let's shoot it over to Dustin to, start our conversation today, and then we'll throw it around the room, see what you guys got to say.
Thanks, Jack. Yeah, we had yesterday we made new highs for the move in corn and beans before breaking setback. Ongoing harvest, probably seeing some harvest pressure, intraday, seeing a price you haven't seen in a while. Definitely respectable prices compared to sub 4 and sub 10. So wondering if that's not some harvest pressure. We also have the report coming out on Monday, and it's kind of like I would say almost underreported. This is a fairly large stocks ending report. September 1st stocks count released September 30th. Average guess has corn at 1.844 billion bushels carried into the 24 season, ending 23. We had a really large June stocks report number, is surprisingly large, and a very large percentage that was held on farm. So this could be one of the more volatile endings to a stocks report. 100 million bushel swing either way wouldn't be that surprising. Just based on how large that June stocks report was and how big the market sold off. I think there is some chances that we could see some bearish surprises there. The high end of guesses has us at 2.017 billion carried out for corn. And we just have to kind of keep that in mind for Monday's report, is that, very hard to count that until the end. A lot of that is shifted hands from producer to commercial in that time frame. And the only reason we're really posting 1.844 is just our trust in what WASDE has been projecting for demand. I mean, we've seen very good demand through that time frame. We've seen good ethanol grind, good exports. The feed demand is the question. And, to be down at 1.8 wouldn't surprise me. But I also, just given how large we kept hearing about, facilities that were full in the East as we were, finishing out there in August and September, we could see a little bit of a bearish surprise too, and it wouldn't surprise me there either. So just something to keep in mind as you go into Monday. Maybe a little bit extra padding prior to Monday's report to the downside if you've been considering it, trying to get some floors in place, maybe using some options or some more sales might not be a bad idea.
Awesome. Ben, got anything on your mind over there?
Yeah, I think that it's worth noting that Hurricane Helene is working its way up kind of from Georgia on a northwesterly track towards Kentucky. If it's to stay west, it probably won't be as detrimental, although certainly not minimized for those people in Kentucky, but they're calling for 50, 60 mile an hour winds. The importance of this, there's an awful lot of very dry corn there, especially southern Ohio, but it looks like they're going to miss the worst part of the winds. But when a storm is big, you can certainly get some carryover. And with an area that's suffered from pretty significant drought, probably one of the worst areas that is in the major part of the ag belt, we could see some down corn there, which certainly no one wants to see, and there is some concern from customers in that area. So depending on how this winds up, I think it's worth watching today. But as of right now, the track looks to be a little bit west, which will be worse for people who farm in western Kentucky, potentially far southern Indiana, so parts of Tennessee. But if it were to move back up a little bit to the northeast, tremendous amount of corn that's vulnerable there to any sort of hard winds.
Thanks for that, Ben. Brian, I know Fun Fact Friday is kind of your thing on Friday, but do you have anything to add on the grain side before we jump to livestock?
Yeah, thanks, Jack. Yeah, just adding on what Ben was saying with the hurricane. Mississippi levels are getting a really reprieve from this, moving way above the threshold of 5 feet below. I think they're actually going 1 feet above, so they're going to get hit with a ton of rain. The only problem is that you need the rains from the north and the northwest to fill that need, because it's all moving north to south, as everyone knows. So speaking with guys up north, with this river situation, it looks like after this, event comes through, the levels start dropping again. So guys are really starting to try to get on basis. We've seen this last year when the Mississippi went down 12 feet, basis went to the crapper. So we're really trying to get in front of that. So if anyone's using the river to get some things done, looking elsewhere in your area would probably be very beneficial to you, knowing the river levels could get right back down.
Thanks for that, Brian. Ryland, let's talk meats.
All right. Well, big price action in the live cattle sector. Market kind of shot up yesterday out of nowhere. Packers started paying up for cash, so prices look like generally around 185 in the South. So those $2 higher from the previous week, and I think everybody's kind of looking at it like price action was good on the board. Beef prices were down, but it still kind of felt like the market wasn't paying any attention to it. So we got the higher trade. I think the market was generally expecting steady to happen, but they jumped their bids yesterday, and the board kind of took off. So open interest was lower. We did start under pressure. It seemed like you had a little bit of short covering, or excuse me, a little bit of selling there, or maybe some profit taking from the longs. But overall, it seems like the news is pretty good coming into today. It looks like the bulk of trade is pretty much done, I would imagine. So kind of pricing in that higher trade right now. So we'll see if we got any kind of liquidation just before the weekend. But overall, the trend is your friend at this point. Markets are still going up. Cash is still going higher. And I think just overall, there's some real concerns that we're going to start cutting back the slaughter to a large degree if the beef prices continue to slip. So I think that's something to watch going into next week. I mean, last year it felt like cash market just kind of drifted sideways for the most part at this time. So at this point, leaning towards that at this point, just kind of in that narrow range unless something really changes here. Cold storage report didn't really add too much, I think, to the cattle side of things. We usually don't really trade it that much, but overall looked like year over year beef stocks were down 0.1%, so I don't think we're going to get a mover and shaker out of that. But the talk of the town really is going to be on the hog side of the market today. We had the hog and pig report come out, and all hogs and pigs kept for breeding and marketing all kind of fell in line with the trade estimates. So the report was kind of seen as neutral just overall. Breeding herd dipping down a record number of pigs per litter. We got an all hog and pig inventory SEP1 that's the largest since 2020. So you've got a lot of things that I think just kind of hinting that supplies are pretty good here. And really the one standout was the weight groups. The heavier weight groups were kind of in the higher, well above the higher end of the range of guesses. So just overall, it kind of feels like supplies may be a little bit larger than expected in the front end of the market. And we've been on this really nice rally. So we'll see if that gets anybody to get shaken out of the market here. I mean, the 180 plus weight group was up 5%. So I think that's a little bit of a standout. Otherwise, the report, I think, was widely regarded as just kind of neutral. So we'll see if we get any, the price action was a little weak, but we did hold the 10-day moving average in the D. So we'll see if we see some follow through selling here just in the front end of the market. Otherwise, towards the back, relatively steady. But overall, I think just we're going to be swimming in pork for the next couple months here.
Thanks, Ryland. As we're all aware, and we wait all week to be able to say this. I know Brad, who's watching, at his desk, he waits all week to hear me say this. It is Fun Fact Friday, which means we're going to queue up Brian and see what he has to say. Brian?
Thanks, Jack. Happy Friday, everybody. What do I got here? Cornflakes.
Old school.
Yeah, it's a staple to a nutritious breakfast since the 1800s. But was that John Harvey Kellogg's real reason to make Kellogg's cornflakes? No, he wanted to suppress your sexual needs and desires. Yes, he was a devout Seventh-day Adventist of Christianity, which was advocated a strict vegetarian diet who also was a believer of abstinence and believed that sex was abnormal and wrong.
Mm.
So to curb those desires in your body, he developed cornflakes, the most bland cereal that you can come around. No sugar added. So the question I get home when I get home today is to ask my wife, why are there 7 boxes in my pantry? But so yeah, I thought that'll bring some levity to your start of your Friday there, guys. So happy Friday. Have a great weekend. Stay safe out there.
Wow.
Get your cornflakes, boys.
Yeah, cornflakes. Wow, what a weird history for cereal.
Yeah.
Any last parting shots before we go here?
Yeah, I would just say one thing, Jack. Actually, I'm going to just share my screen real quick. Just the dollar index. We're just starting to break down below 100 for the first time, really, in all of 2024. And so that's something to kind of watch for, is that we're just getting into larger rate cuts than expected. There's talk that, things start to slip. QE is back on the table again. Just one more kind of tailwind for flat price of commodities. If I would flip over to something like, let's just go to gold real quick. You can see how we just continue to defy gravity on hard assets. And we don't want to forget that we're still dealing in dollar denominated products, that denomination is rising from a falling currency. So just want to keep that in mind as we start to get some of these prices up above 450, for example, in DC25 corn. We just started to see in some of the university data published break evens. I think FarmDoc has got something in the mid 460s for an average price break even. If you just go back into that math for the per bushel that they were talking about for Central Illinois. We're just getting above that level, and a lot of these costs are not locked in yet. We would definitely still encourage hedging, but we would do it in ways that still leaves for some sort of room for, things to move. With this dry finish, you got weird things with the hurricane, if that causes any issues during harvest. Or if we happen to come out with a 180 yield nationally, the world is still kind of tight on grain supplies. So I just want to kind of keep that kind of balanced in there. Even though we're expected to go into a record harvest, you still got to consider things that are that might end up breaking that narrative down the road. And I think the main one, in my opinion, is a fall in the currency, fiat currency. So,
gotcha. Yeah, the mental whiplash to go from cornflakes back to the gold charts. I mean, that's a little much. No, good intel. Thanks for that, Dustin. Hey, if you guys like watching the show as much as we like putting it on, give us a like or subscribe on YouTube. It helps us out with the algorithm. It gets our show out to more and more people. We sincerely appreciate it, and it doesn't cost you a dime. So, we thank everyone for showing up on a daily basis to tune in, especially on Fridays, which are, way more fun. Beyond that, we, every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everyone has a great weekend. Thanks again for having me. Maybe Dan will show up and do his job at one point. We'll see. And have a great weekend, everyone. We'll talk to you soon.
Thank you.
Check.
Take care.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.